Joining us in a first on CNBC interview, Onsemi CEO Hassan El-Khoury. Hassan, it's great to have you. Good morning.
Good morning. Thanks for having me.
Where specifically did the upside to the quarter and guidance come from? I know for the most part you have lots of exposure to the automotive and industrial end markets.
Yeah, so both these markets came in actually very strong for us, given the underlying mega trends and the investment decisions we've made starting 2 years ago. We actually combined auto and industrial is now 80% of revenue. And we also posted a record automotive revenue crossing the $1 billion mark. That strength in the automotive market, I wouldn't just put it as a general statement, but it's within these markets where we invested in the electrification mega trend, the charging infrastructure, energy infrastructure as far as industrial goes. The strength in these as these customers ramp is what's given us the solid results and the solid outlook.
Does that mean that your guidance does not necessarily reflect an upbeat view of the automotive cycle itself, broadly speaking into next year, or you're just essentially saying that the bigger trends are in your favor?
The bigger trends are in our favor. But look, even outside of the silicon carbide, which is a big portion of our growth in electrification, even without that ramp that we started late last year into this year, the core business is also growing. So there is strength in the demand as far as we see it in those two markets. But of course, on top of that, we have the mega trend of electrification with our silicon carbide business ramping nicely and a little bit ahead of plan.
Can you walk us through, Hassan, help us understand, an ICE, an internal combustion engine vehicle versus an EV vehicle? What is the content difference for Onsemi and or what, in terms of the margins on the chips that might go into each of them? How is that different?
So if I let's talk about purely the drivetrain. Everything else, interior and so on, you can take it as a constant. But drivetrain specifically, for Onsemi, we have about $50 worth of content in an ICE engine or internal combustion. That content per car goes to $750. So about $700 more of content when that vehicle goes to electrification. Of course, the biggest portion of it is the traction inverter or the motor that runs it. But you also have to think about, if you open the hood, you got all these belts under the hood that drives a lot of compressors and pumps and so on. When you have a motor and you don't have an engine anymore, all of these are also motor control, which is, again, driving content for us. So the content gains are not just on the drivetrain itself or the propulsion, but everything required under the hood to drive the vehicle.
Hassan, what's happening in terms of capacity additions? We know that there is this semiconductor production investment boom going on. Does it bump up against the categories that you are in mostly? Are we looking at a time down the road when we're going to have any kind of an increase in capacity such that it'll affect industry margins and your margins?
Yeah, we don't see that specifically where we are investing. So two pieces of it. Big investments for us are on the silicon carbide. We see that environment still constrained over a multi-year period as that business ramp. Just to put it in perspective, penetration of EVs into total vehicles made is only going to be about 50% penetrated by 2030. So this is a multi-decade ramp. And therefore, that technology ramp and the capacity that's been put in is going to remain a little bit constrained. For us specifically on everything else, which is where the concern may get, we actually are going to a fab-right strategy. Just to remind everybody, we divested 4 fabs last year to really refocus our capacity footprint as we transform our business. And the LTSAs, or the long-term supply agreements that we've been talking about and have engaged with our customers, give us a very clear visibility on where to put that capacity so we don't run up into this concern that you mentioned.